what the difference between the cash basis and the accrual base. So we have two ways to account for the revenue and expense, or two accounting methods to account for the revenue and expense. So if I write here how to account for revenues and expenses. There are two ways to account for revenue and expenses. One is called cash basis. And another method, which we name it accrual base. So these are the two methods that, or the two accounting systems that can be used to measure or to account for revenue and expenses. Please make sure that you know that the accrual base is this one is only acceptable, or the only method allowed under IFRS. Do you remember what do you mean by IFRS? IFRS are the international financial reporting standards that we are following. So in this course, we're going to follow IFRS, and the only method that's acceptable under IFRS is the accrual base. Okay? The cash basis is another method maybe used for the private enterprise. So we're going to know the difference between the two bases, but by default, all the questions that we're going to take, we're going to follow the accrual base, unless it's told that you have to follow the cash basis. Okay? So by default, you're going to apply the accrual base. What are the difference between the cash basis and the accrual base? Let's start with the revenues. How the revenue is measured under the cash basis. If the company is following the cash basis, revenue is recorded, let me use a different color. Under the cash basis, revenue is recorded when cash is received. So under this base, the company will record revenue when they receive cash. Accrual base, on the other hand, says that revenue is recorded when the products are sold or services are rendered. So under the accrual base, the base that we're going to use, revenue is recorded when the company sell products or when the company provide the service. They don't have to wait until they receive the cash to record revenue. Once the products are sold or once the services are rendered, revenue should be recorded. So let me give you an example to differentiate between these two methods, or these two accounting bases. Assume that company A, so let me have here example. Assume that company A sold inventory for $10,000 on account. If the company is using a cash basis, do we have a revenue or not? Let's apply the rule. The company sold inventory on account means that they're going to pay the cash, they're going to receive the cash later on. So according to this transaction, no cash is received. So if the company is applying the cash basis, they're going to record no revenue because there was no cash received. So if the company is following cash basis, no revenue has to be recorded because there was no cash received. While if the company is using accrual base, which is the acceptable method under IFRS, they're going to say, okay, the company sold inventory. So according to the definition of the revenue, revenue is recorded when the company sold products and the company sold the products. So under the accrual base, yes, revenue will be recorded, despite the fact that no cash is received under accrual base. We don't have to wait until the cash is received. Once the products are sold, revenue can be recorded. Is this making sense to you guys? Raise your hands if you're following me. Okay, perfect. Do you have any question? I will unmute you guys, but you can mute yourself. So that's just to give you the chance. If you want to ask any question, you just can talk. So I will unmute you all now. Mute yourself. Everybody else. When you please mute yourself. Okay, I will unmute the people.
问人有啥用呢？这让人笨的一天。
Can you use the book?
Same.
把娃都能弄丢，让他看半天娃，把娃都能看丢了。
Okay. Seemed that it was a bad idea. Okay. I have a question here. So if customers buy something and receive it even though they have not paid, that's a revenue. Okay, you're thinking from Miguel, you're thinking from the company perspective. So revenue is the price of the product sold. So if you mean that if the company sold products and did not receive the cash, yes, it is still revenue under the accrual base. Okay? Let's go to the expenses. How the expenses is measured under the two bases. For the expenses, if I'm talking about the cash basis, expenses is recorded when cash is paid. So only the company say that whenever they have any outflow of cash, this is an expense. But under the accrual base, and pay attention please, under the accrual base, expenses are recorded when the company benefit from the resource. What do you mean by that? Assume that I'm talking about a utility bill. So every time at the end of the month, when the company used the utility and benefits from using the utility, they record that they have a utility expense, even though if they're going to pay it later on. So when the company benefits from the resource, this is the time to record the expense. Another example, assume that at the end of each month, after the company used the effort of their employees, they're going to record that they have a salaries expense, even though they're going to pay the salaries later on. So every time the company benefits from the resource, we have to record that as an expense, even if there is no cash payment now. So this is the first case to record an expense when the company benefit from the resource. The second situation that we can record expenses when the company used an asset. Every time the company use an asset, the used part is recorded as an expense. So under the accrual base, the expenses are recorded under two situations. When the company benefits from the resource, that's an expense, or when the company use an asset or benefits from an asset. In both cases, it doesn't matter whether we pay cash now or later on. Let me give you an example on the expenses. assume that the company used 1,000 worth of $1,000 of supplies. So the company purchased some supplies at the beginning of the month, and at the end of the month, they found that they used 1,000 of these supplies. So if the company is using cash basis, this is no expense. Why? Because when I use the supplies, I did not pay any cash. So according to the definition of the expenses under the cash basis, there was no outflow of cash. So under the cash basis, this is not an expense. But under the accrual base, supplies is an asset, and the company used the asset. So they have to record an expense, which is called supplies expense, once they used the asset. So yes, under the accrual base, they should record an expense, and the expense is called supplies expense. Why under the accrual base we have an expense? Because the company used the asset. Is this making sense to you guys? Can you put a green tick in front of your name if you got it, or a red cross if you don't, if you need me to repeat, or unmute yourself and ask a question if you want. Okay, let me give you another example. I will give you more examples, but let me use one by one. Assume that the company purchased equipment for $10,000. Is this considered an expense under the cash basis or not? Under the cash basis, expenses is recorded once there is an outflow of cash, once there is a payment of cash. When I bought the equipment, I paid cash. So yes, under the cash basis, this is an expense because I paid cash. Under the accrual base, this is not an expense. Why? Because now when I purchase the equipment, I did not benefit from it yet. Maybe by the end of the month or maybe by the end of the year, I'm going to record that as an expense. But now it is a brand new equipment. I didn't use it yet. So no, it is not an expense. It will be an expense when I use the asset. But now it is not an asset yet. I'm not talking about, no, it's like, but didn't they use the cash to buy it when it's, which is an asset? No. So you're talking here. Okay, let me give it another way. Under the cash basis. Okay. Let me finish this. Yeah. Under the cash basis, the revenue is equal to cash inflow. Every time there is an inflow of cash, this is what we name it as a revenue. Under cash basis, expenses is equal to cash outflow. So under the cash basis, revenue and expenses is measured from the perspective of the cash, whether it is inflow or outflow. Under accrual base, my criteria is different. For the revenue, it is recorded only when products are sold. or services are rendered. For the expenses, I record that when I benefit from what I purchase, if I benefit from the resource, or when I use an asset other than cash, to be specific. When I benefit from any asset other than cash. Okay. I will answer your question. Please keep your questions, but give me a minute until I give you more examples. Okay, let me share another whiteboard. Let me give you this example. Company sold inventory for 5,000 cash. Company paid salaries expense or owed salaries expense to employees to be paid next month for $5,000. Company paid 500 utilities for the month. Company sold inventory for 6,000 or 7,000 on account. Company purchase machine for $4,000 cash. Okay, so we have these transactions and they ask us to calculate net income under cash basis and accrual base. Okay, I will start with the cash basis. Under the cash basis, net income is equal to, and instead of revenue, I will make it inflow of cash minus, and instead of expenses, I will make it outflow of cash, because under the cash basis, revenue is represented by any cash received and expenses is any cash I paid. So under the cash basis, the net income is the difference between the cash received minus the cash paid. Okay, so let's analyze every transaction. Let's start with the first one. When the company sold inventory for 5,000 cash, under cash basis, if this transaction involved a cash effect on cash? Yes.
Yeah, inflow.
Inflow, very good. So I have cash inflow, the first one equal to 5,000 because I received cash. Second one, company owed salaries expense to employees to be paid next month. If this transaction involved any cash effect on the cash today? No. because I'm not going to pay any expenses. I'm going to pay next month. So this has no effect on the cash in or out. So under the cash basis, this transaction should be ignored. Are you following? Raise your hands if you're following, please. Perfect. Transaction number 3. Company paid 500 utilities for the month. This represents an cash outflow because I paid cash. So under cash basis, I have an outflow of $500. 4. Company sold inventory for 7,000 on account. If this transaction has an effect on cash, write on the chat box, please. Yes or no? No. Very good. Why? It is on account. That means I will not receive anything now. So this transaction should be ignored in the cash basis. The last one. Company purchase machine for 4,000 cash. This has an effect on cash. Actually, yes, and it is an outflow. So I'm going to add to the outflow $4,000. So under the cash basis, the net income is equal to $500, which is the 5,000 outflow minus the 4,500. So the net income or the net is equal to 500 if the company is using a cash basis. Is the cash basis clear for you? Raise your hands if you got it, please. Okay. Anyone has any question in the cash basis before moving to the accrual? Okay. I will rate this one, or I have space. Oh, I have space. Okay. So let me use a different color for the accrual base. Let's calculate on the accrual base. Under the accrual base, net income is equal to revenue minus expenses. And revenue occur only when the products are sold or services are rendered. Expense occur when I benefit or use the asset. Without using or benefit from the asset, it is not an expense anymore. It will be an expense when I use it. So let's start from the first one. Company sold for 5,000 cash. I sold a merchandise, I sold a product, so this is a revenue. So I have a revenue for $5,000 because I sold the product. 2, company owed salaries expense to employees to be paid next month. Is this an expense? Yes, because the employees worked for my company. I benefit from their effort, so I have to record the expenses even if I'm going to pay it next month. But because I benefit from them, so I have an expense. So expenses is equal to $5,000. Company paid 500 utilities for the month. So company utilities is an expense, yes, because I used the utilities during the month. So I have to record that as an expense. So I have 500 for the utilities. Is this making sense to you? Are you following? Perfect. Company sold inventory for 7,000 on account. When the company sell products, this is a revenue even if the company did not receive the cash, because under accrual base, revenue is recorded once products are sold. So actually, I'm going to record that as a revenue because I sold the products. So I added 7,000 to my revenues. So every time we sell a product, this is revenue. Company, the last one, company purchase machines for 4,000 cash. This is a purchase of an asset. So if I want to record this transaction, when I buy the machine, it is an asset. I'm going to record an expense when I use the machine by the end of the month or the end of the year, depending on the accounting cycle. Sometimes companies prepare financial statements at the end of each month. So in this case, at the end of the month, I'm going to record a part of the machine as an expense because I use the machine for 1 month. But sometimes, and this is the most common, that the companies prepare the financial statements once per year. So I have to wait until the end of the year, and I'm going at that time to record a part of the machine as an expense because I use the machine for 1 year. But now this is an asset. It is not used yet. So I don't record this as an expense. So net income will be the 13,000 minus the 5,500. Net income equal to 13,000 minus the 5,500. Okay? Is this making sense to you guys? Okay, I have a question. Oh, sorry, 12,000. Sorry. It's 12,000 minus 15,500. Yeah. Equal 12,000 minus the 5,500. Okay. The force. Okay, let me answer the questions. Since you haven't used the machine yet, it is under accrual base. Martin, I think you're asking about if the machine is not used under the accrual base, it is not an expense. No, under accrual base, the machine, when I purchase, it is an asset, but the end of the month or the end of the accounting period, I'm going to record that as an expense. What about the 4,000? Philip, you're talking about the 4,000 when a company purchases a machine. This is an asset. It is not an expense. It will be an expense when I use the machine at the end of the month, at the end of the year of the accounting period. Why do we add 5,000 revenue and 500 expense? I'm not sure what do you mean by this 5,000. The second 5,000 is an expense of the salaries expense. I'm not sure. Maybe you missed that. Okay, you got this? Raise your hands if you got it. Okay, do you have any questions? Let me have an example or solve an example that you have in your notes. Nicholas, so purchase of an asset will not be included. Purchase an asset is not an expense. Purchase an asset is an asset, but when I use the asset, it will be an expense later on. So when I buy a machine under accrual base, this is not an expense yet. But when I use the machine, it will become an expense later on. Okay, let me solve the example here that you have in your notes. You have a company that began an operation on January 1 year 3. On that date, the company buys a machine for 240. The machine is expected to have a useful life of 4 years. The word useful life means every time we purchase a long-term asset, and I mean by a long-term asset, an asset that we expect to use for a long period of time, we give or we estimate how long this asset will be useful to be used. So when we buy the machine, we expected that this machine will be useful to be used for 4 years. So we name that a useful life. After this 4 years, we can sell the machine for $40, and we're expecting to sell the machine at the end of year 6. This company had sales, and all the sales are in cash, and they expect to have $150 per year. And they have some expenses that they paid in cash that will be $30 per year. He asked us to prepare an income statement under a cash basis and under the accrual basis for the year of 3 to year 6. Okay, so let me share here a whiteboard and try to solve this question. So let me summarize the transaction that I have here. So I have the company buy machine for 240 at end of year 6, useful life 4 years, resale value at end of year 6 equal to $40. Then we have cash sales, 150 per year, and we have cash expense, $30 per year. And I need to prepare the income statement or net income under the cash basis and the accrual base. Let's start with the cash basis. I need to calculate that for year 3, year 4, year 5, and year 6. So what are of these 3 transactions should be considered? If I'm talking about cash basis, then my net income is equal to inflow minus outflow of cash. So what are of these transactions considered an inflow and outflow of cash? Okay, I think the machine was bought at the end of year 3, not 6. Let me write this here. Okay. Buy a machine. If this considered has an effect on the cash, please answer me in the chat box so I know that you're following. Under the cash basis, when I buy a machine, if this is an effect on cash, yes. So I'm going to write here, buy machine, this considered as an inflow, and the buying the machine happened in year 3. So I have an inflow of cash in year 3. When I sell my machine at the end of year 6, is this considered has an effect on cash? Yes or no? Yes, when I sell the machine at the end of year 6, I'm going to receive cash. So resale of machine, that will give us a cash for $40. Let's put between 2 brackets the outflow, and to know that this will be deducted just to make it easier for us. So when I buy a machine, this is an outflow of cash, but when I sell the machine, this is an inflow of cash. Cash sales. If it is sales and I'm going to receive in cash, so that will be an inflow. So every year I'm going to have $150 representing an inflow of cash when I sell products. Cash expenses, that mean expenses paid in cash. This is represent an outflow. So every year I'm going to have a $30 as an outflow of cash. So if I need to calculate the net income under the cash basis, I'm going to focus on inflow of cash minus outflow of cash. Buying a machine is an outflow of cash, happened in year 3. When I sell my machine in the year 6, this is an inflow of $40. Cash sale, inflow, cash expenses, outflow. Then I will make the plus and minus, and I will find that in year 3, I have a negative 120. In year 4, I have a plus of 120. 120 in year 5, 160 in year 6, and a total of 280. Making sense, guys? Can you put the green check if you're following, please? Okay. Cash basis would be any cash from the company at any time while the accrual base recording what's done at this moment. No, Nicholas, I'm talking about what happened at the end of each month. For both of them, I'm calculating the net income at the end of each month or at the end of each year. So under the cash basis, it is the inflow and outflow that's happened in the whole month. And for the accrual base, it is the revenue minus expense for the whole month. 180, 280 is the sum of this 4 years. This is the total. The 280 is the total of year 3 to year 6. Okay? Colin, yes, if the notification, I will talk about this later on. So, but yes, for your question. Okay? Can I move to the accrual base? If you're ready to move to the accrual base, please put the green sign in front of your name. Perfect. Guys, are you done writing? I need to delete this to keep this information in front of me. So if you're still writing, put the red cross so I can wait for a minute. Okay, Petal, I will wait for you for a second. Under the accrual base, I'm going to switch my mind to the definition of revenue and expense for the accrual base. Reminding you, revenue is when I sold the products or deliver or provide the service. For the expenses when I benefit or use the assets. Okay? Beatrice, are you done? Okay, I don't have time, so I have to move. Under the cash basis, sorry, the accrual base. Year 3, year 4, year 5, year 6, and the total. Let's start. Is buying a machine considered a revenue, an expense? No. When I buy a machine at year 3, it's brand new here, so it is not an expense. But I know that by the end of year 3, I will be using the machine for a whole year. At the end of year 4, I will be using the machine for 1 year. So actually, I've been using the machine at the end of each year. So because I use the machine, I'm going to record an expense. If you're talking about a long-term asset, and when you use the long-term asset, the expense related to the long-term assets is called depreciation expense. So what is the depreciation expense? The depreciation expense, let me explain that down here. So depreciation expense is when the company use the long-term assets, then it should be recorded, the used part should be recorded as expense. And the name of the expense is depreciation expense. So at the beginning of year 3, I don't have an expense. When I pay the $240, when I buy the machine, this $240 is not an expense. But by the end of year 3, I use the machine for a whole year. So if I use the machine, then I have to record that as an expense. The name of the expense is called a depreciation expense. We're going to have a whole chapter about the depreciation, but for now, I'm going to give you the simple way to calculate the depreciation expense under what we name it a straight line method. So how we are going to know how much we use from the asset every year. In order to know how much we use from the asset every year, we're going to apply the following formula. If you have the cost minus the resale value divided by the useful life, you're going to know how much of the asset has been used. So one more time. When I'm talking about a long-term assets, those assets that were going to be used in my company for a long period of time. At the time of the purchase, this is an asset. It is not an expense. But at the end of the year, when I use the asset for a whole year, I have to say that I used the asset. When I use the asset, then I have an expense, because under accrual base, expense is recorded when I use an asset, and I use the machine for a whole year. So there should be an expense. The name of the expense is depreciation expense. How to calculate how much I use from the asset? There's 2 different methods, but for now, we're going to apply the straight line method. According to the straight line method, the depreciation expense, which represents how much I use from the asset, is equal to the cost minus the resale value divided by the useful life. If I need to apply this formula in my example, I know that I paid $240 as a cost of my machine. The resale value is $40. The useful life is 4 years. So that makes my depreciation expense equal to $50. So that means every year I used a $50 out of my machine. So I have an expense equal to 50 by end of year 3, 50 by end of year 5, 50 by end of year 6. So I have an expense, which we name it depreciation expense. It happened because I used the machine, and this is how we calculate that. Okay, depreciation happened, whatever is we paid by cash or on account, it doesn't matter. As long as you own a machine, as long as you own an asset, it doesn't matter how did you pay for it. Then you have a depreciation expense. Wouldn't be only depreciation. It's mentioned in the question that the depreciation, the useful life of the machine is 40 years, Martin. So if you go back to the question, the machine is expected to have a useful life of 4 years. So that's why we divided by 4. Yes, Noah, it's 240 minus 40 divided by 4. If it is divided by, if it is by months, we're going to multiply the number of years by 12. If the depreciation expense is per month, then I will divide by number of months. So you're going to multiply the 4 by 12 months. Depreciation would only be if you bought by a loan. No niche. Depreciation will be, depreciation is on the asset. It doesn't matter whether you pay the asset by loan or by cash. It doesn't matter. Okay, are you good so far? I'm taking so long, guys. I will never be on schedule in this by this. Okay, raise your hands if you're following. I don't care as long as you understand and you're following me. Okay, I love the sound. Let's continue. Still, we didn't finish this one. So we are done with the first part. Let's see that under the, we have a cash sales. Yes, that will be a revenue under accrual base because we sold products. So we have 150, 150, 150, and 150. So as long as we make a sale, this is a revenue. Cash expense. Yes, we have an expense equal to 30 every month. So this is the net income under the accrual base. It includes the depreciation expense because I use the asset. It includes the cash sale. It includes the cash expenses. If I need to add, you're going to find that you have 70 as a net income for the year 3, 70 in year 4, 70 year 5, 70 year 6. And if you add the 4 years, you're going to find the total equal to 280. The 280 is the sum of the 4 years. So if you noticed that, if you look at your notes, you're going to find that under accrual base and the cash basis, the sum of the 4 years are the same. But how the revenue, how the net income is divided between 1 year to another, this is the difference between the cash basis and the accrual base. So you have to keep in your mind at the end on the long-term cash basis and the accrual base will give the same answer. But on the short term, every year has a different amount of revenue net income. Okay? To remind you, please, the only acceptable way is the accrual base. So don't use the cash basis unless it is told you so in the question. So by default, we're going to use the accrual base in calculating our net income. We have a question, when we sell the machine, this is not included in the accrual? No, because when I sell the machine, okay, this is a good question. When I told you I'm selling the products, I'm talking about the products that we are trading with. So for example, I am a company that sell computers. So my revenue come when I sell my computers. If I have an old machine that I own and I sold it, this is not revenue. I'm selling my assets. So when I'm saying about selling the products, I'm talking about the products that you are trading in your business. Not selling anything in the company will be considered as revenue. When I sell my assets, maybe I will have a gain out of the sale of my assets, but it is not named revenue. Revenue came only when you sell the products that you're trading in. If you are a computer company, then your revenue comes from selling computers. If you are a supermarket, then the revenue comes from selling the food and products that you have in the supermarket. If you are a boutique, your revenue coming from selling the clothes that you have. So this is the revenue that we're talking about. But when you sell your assets under the accrual base, we name that as a gain, not as a revenue. Do cash base and accrual base need to come same? If you are talking about the sum of the cash basis and the accrual base, on the long term. If you compare the two examples that we had, Adita, that you're going to find that the sum of the 4 years will be the same, but every year has a different number. So on the long term, we have an equal amount, but how much is allocated to each year may be different between the two bases. Okay? You're good? Okay. Do we need to say the name of the company? Yeah. Yeah. If you're preparing an income statement, you have to put the heading, Miles. Okay, raise your hands if you got this one, please, so I can move. Good. There's an example that you have in your slides that this is the one I'm going to solve. So please keep that in front of your eyes so you know which transaction I'm going to use. If you have this slide in front of you now, put the green text so I can start solving this one. It's called Coney's Midnight. It is in your notes. I'm going to record the transaction in this one. Okay. Let's start here. The one that's in gray, the light gray, that's what we solved in the previous class. I'm going to do the one that's bright, starting from August 2nd. On August 2nd, customer placed orders for all Coney inventory on hand, agreeing to pay $6,000. What should be the entry? If there's an agreement to pay, just an agreement, then we don't have to record anything. So the right answer for this one is no entry. Because now here, there's no exchange, no change in the financial position. It's just an agreement. So if I told you that we're going to hire a secretary, so now hiring the secretary is not an entry. But when I pay the secretary the salary, that's the salary's expense. When I have an agreement, just an agreement, this is no entry. When I deliver the products, then I will have an entry. So in August 2nd, when the customer placed order for all the Coney, because this is just an agreement, a signing of a contract, I don't have to record anything on the 2nd of August. I will start recording once the products are delivered or sold. So in this transaction, I don't have to record anything. Okay. In mid of August, the merchandise is delivered and customers promise to pay later on. Pay attention, please. Every time the company sell products, 2 entries are required. Not only 1, but 2 entries are required. Every time the company sold products,